Thank you all for being here. I'm really grateful to be able to present here and present my job market paper that I've been working on for the last several years. So without further ado, I'm excited to present my paper titled Data Integration and the Accounting Labor Market Effects of Generative AI. So broadly, where I'm coming from is the sense that we probably all have at this point that generative AI clearly seems to be a transformative new technology. With that has come some evidence of documented productivity benefits in a lot of controlled settings. It's very easy to find a lot of sensational headlines. And at the same time, with these productivity benefits, there's been a lot of fear that there may be disruption in several different labor markets. So again, very easy to find kind of sensational headlines, including for accountants, which will be the focus of this study. So at the same time, with these productivity benefits and this fear of disruption in the labor markets, large sample empirical work has really struggled to find any clear sense of generative AI actually impacting the labor markets, at least in the short term. And I argue that this is very characteristic of the early stages of many different types of technological change. So in the 1980s, Robert Solow coined something that ended up being termed Solow's paradox, that we see the new technology everywhere except the productivity statistics. And we don't really see these effects in the early stages of a technological revolution. And the reason really is because organizational change is very slow, and it requires a lot of investments, not just in the technology itself, but also in complementary processes and infrastructure. And so what my study's trying to do is take this framework and identify one complementary investment in the context of generative AI adoption in corporate accounting especially. I call it data integration, which I'll talk about. And I'm going to use prior variation in how much firms have been investing in data integration before generative AI is introduced as a way to study the early cross-sectional effects of generative AI in the labor market for corporate accountants. So what am I talking about with data integration? I'm broadly defining it as a firm's capacity to connect and retrieve their data and their information from across multiple different internal systems. So if you want a large language model to do the same thing that a human would do to solve a problem, you would need to give them the same information, the same context that the human would have in order to complete a given task. Giving large language models systematic access to organizational data is actually quite challenging, though, and this is a central hurdle for generative AI adoption across a wide variety of occupations at large organizations. So the premise of my paper is that some firms, because of their investments that they had made prior to generative AI, are going to be more ready to share their organization's data with large language models to start embedding generative AI into existing workflows relative to other firms. And the reason that I'm studying accountants is because the nature of what accountants do fundamentally is processing information from several different internal business systems. So this concept of data integration is going to be especially relevant for the work that accountants do, which is one main reason why I'm studying accountants, outside of just being an accounting PhD student, of course. So I won't hold it against anyone for not knowing much about what accountants actually do at a public company. So I'm talking about an accountant who works at Coca-Cola. So much of what they do is in the month or quarter end close cycle, the internal systems will flag that there's a lot of errors between different records that need to be reconciled. So this is called reconciliation. What a human accountant might do is look across the multiple internal systems that the organization has, find the relevant context needed to solve the given reconciliation, aggregate that information together, make a decision, and move on to the next reconciliation until the books are closed and everything matches well. So how would a large language model or generative AI more broadly actually help in this process? So if you had a large language model, it can help with that first step of finding the relevant context for a given reconciliation, aggregate that information together back to the human decision maker, who ultimately is still the one who makes the decision to limit the risk of hallucinations or anything like that. And I guess the key part of my paper here is that this whole process is possible in theory, but it really relies heavily on the large language model being able to connect to the organization's data. If it can't do that, then we're back to the original human scenario with the data sources siloed and no productivity benefits being felt. In terms of the economic framework that I'm building off of with this story in mind, I'm using the basic tasks-based framework with the idea that a bundle of tasks get completed to do any sort of economically valuable output. Those tasks are assigned either to capital, so something like computers, robots, or data, or to different types of labor, like junior workers or more senior manager type workers. And the idea is that there's some sort of pre-period equilibrium with how an organization assigns those tasks to different vintages of labor or to capital. A new technology like generative AI comes in, and then now more of the work is being done by capital that was previously done by labor. This first step is called automation broadly, and it could be either the automation of junior work or senior work, but automation isn't the entire story. In addition, there's going to be some kind of potential for reinstatement, so growing the amount of output that a given occupation does. So this is the framework that I have in mind. The first step of my paper is to kind of make the point that the size of this automation shock is going to depend on complements like data integration. So I'm going to first validate that prior investment in data integration by these companies does seem to predict generative AI adoption, both more broadly at the firm level and also within the accounting function specifically, given its natural connection to data integration. Then from this framework, I'm going to try to use my paper to answer three main questions. So the first question is, what is the effect on net employment? Or broadly, does automation seem to outweigh reinstatement for accountants? Second question is, what type of labor is most affected? These junior workers or these more senior workers? And then the third, broadly, is to examine for the work that human accountants are still being asked to do at these more data integrated firms that are adopting AI, how does remaining work seem to be changing for these workers? So, in terms of the measurement and design that I have for my study, I'm using a labor-based measure of prior investment in data integration before the release of ChatGPT for about 3,600 public companies. I'm using a data source called Revelio, which broadly can be thought of as a large scrape of all of LinkedIn. The idea that I have in mind is that salaries paid to data integrators prior to the release of ChatGPT allow firms to kind of build up their informational architecture within their systems. So I'm measuring salaries paid to data integrators in 2022, scaled by firm size and demeaned within an industry. And I'm going to use it in sort of a diff and diff design where some firms are more or less exposed to generative AI for the accounting function, for the work that their accountants do, as a result of this pre-existing investment that they've already made. For the sake of time, I won't go through my validation in great detail, but I find that prior investment in data integration predicts generative AI mentions in a variety of disclosure mediums, so the 10Ks, earnings calls, all job postings, as well as the resumes of their employees specifically. And I show also that the generative AI mentions seem to be especially prevalent in the resumes of accountants relative to those in other occupations, again, because the nature of the work that accountants are performing does rely so heavily on this notion of data integration. Data integration is going to specifically be a complement for accountants relative to other occupations in the same firm. So now I'm going to start off by showing some evidence on the effect on net employment for these accountants at these more data integrated firms. Again, using LinkedIn basically as my primary data source. What I find is that accountants at more data integrated firms do seem to be dropping off, and the process is sort of accelerating as we go from 23 to 2024 to 2025 for these kind of staff level or more junior accountants. So as generative AI seems to be kind of more and more meaningfully adopted into these companies, it does seem like there's less demand for junior workers and that this effect remains within firm. So if you look at accountants relative to an occupation like lawyers that are similarly exposed to generative AI and kind of broadly a similar occupation, we don't see this same decline for lawyers because they're not as naturally connected to this complement of data integration as the mechanism with which information is shared to complete tasks. So now I'd like to say generally that my first result is that there's a reduction in the demand for junior accountant headcount at these more data integrated firms. And my second question is going to be if that result remains for the kind of higher level workers or if it's specifically concentrated in the entry level accountants. So this is a reminder, I just showed you this slide from the junior accountants. If I then turn to the senior accountants at the same firm, I'm finding more or less no detectable change in the demand for higher level accountant work that's being performed. Of course, it is maybe starting to look like it's something to keep an eye on, but for the most part, this effect is concentrated basically entirely in the junior accountants within firm relative to the seniors. So I want to take the remainder of my presentation to talk about what I think is on a lot of minds for university administrators, at least in the context of accounting, which is how does remaining work change and what skills are now required of accountants more so than they were a few years ago? So I want to start off by saying that I use a large language model to classify the task content of accounting job postings into a variety of how complex different tasks are. And what I find is that these accounting job postings at these data integrated firms for the same seniority level seem to be shifting work more towards analytical work and away from routine work, as well as towards more strategic tasks like creating reports for stakeholders and management. So, if the work seems to be getting more complex at the same seniority level for these accountants, do we want them to be of higher skill? And if so, what types of skill? So I first look at CPA demand. Another reason why accounting is a very useful setting is that they have very clear certification and professional licensing requirements that are not necessarily required for corporate accountants, but are a clear signal of accountants who are of potentially higher skill. What I find is that especially for these more junior level or staff level workers, data integrated firms have a much higher likelihood of requiring or preferring candidates with a CPA in their job postings, even at the same seniority and salary level. And if I look at two different firms that are both hiring for a CPA at the same seniority level in the same metropolitan area, these data integrated firms seem to be willing to pay a wage premium for CPA candidates, because they're looking for workers that are performing higher skill, more complex tasks that they're willing to pay a premium for. Of course, this could just be a job posting effect, so I triangulate this evidence by looking at the LinkedIn resumes of new entrants to these data integrated versus less integrated firms, so that it's the employees themselves disclosing their credentials. And I find that new hires at these data integrated firms seem to be more likely not just to hold CPAs, but also to have an accounting degree, some sort of technical background, as well as some kind of master's degree, like a master's in general or a master's of accounting specifically. And so I think my study has two main takeaways. The first is that data integration seems to be a critical channel enabling generative AI adoption in the corporate accounting function at public companies. And the second is that I think I'm providing some early evidence that generative AI does seem to be starting to change the nature of accounting work at more data integrated firms. And it does so by reducing the overall demand for junior level headcount and reallocating remaining juniors towards more complex work that requires a greater degree of accounting expertise. I really appreciate your time, and I'm looking forward to your questions. Thank you.